So, hello, and a massive hello to everybody. How we doing? Hope we're all having a great time. This is 50 Pips rocking and rolling here on the 30th of November 2014. Not many trade calls or recommendations. You and only you are responsible for the trades you may decide to take, and the fact that you're listening to this means you've read, you understand, you accept all the disclosures, disclaimers here on the website and everywhere else, understanding that we're just performing some live technical analysis in a learning context for educational purposes only, guys. So what's happening? Hey, Karen, big hello to everybody. It's been a while. Good stuff. Look, happy to see a lot of the usual suspects hit here. So let's get cracking. Let's get rolling. By the way, little thank you to all the followers on the blog, all the faithful followers, all the guys who are signed up. Today is actually the fifth anniversary of the blog. It's been 5 years today that we've officially launched the blog and posting those charts and stuff for Outlook, even though we are on Twitter before that. But so there's there. So happy to see a bunch of you guys since the beginning. And there goes Debbie, like clockwork. Hey, how's it going? Okay, so what's going on, what to look for today? Now, keep in mind that this is going to be a potentially very interesting week, okay? So again, that Swiss vote has gone, done and dusted, no big deal. Euro Swiss is trading 120.37, so we can go back to, the usual chop. Now, this week's going to be really interesting because we got a lot of stuff on the wire. So definitely, we're going into December. December tends to be an interesting month. A lot of people talk about the January effect, etc. Keep in mind, that's about the small caps, so outperforming the larger caps. That actually kicks off half month, closer to the end of the month. But anyway, so what we've got going this week is going to be really interesting because we've got a lot of things on the wires, right? So we're starting already Monday. Now in the overnight sessions, we're going to have the PMIs out of China. And the HSBC final manufacturing PMI. So that could clearly cause a bit of wheeling and dealing, a bit of movement. Then we got all the PMIs, from Europe, from UK, and then the US. So that's going to be an interesting Monday, right? We've also got some Fed speakers. So Monday starts off with an interesting tone. On top of it, also after, pretty much everybody that's been on holiday from the Thanksgiving week is going to come back. So we'll see volumes return to the market. It's going to be interesting. Then we go into Tuesday. Now, this is a week when we're going to have a lot of central banks on the wires, right? So it's really not a week to be stubborn. It's not good to be stubborn in general, but definitely not this week. On Tuesday, we've got some data out of Australia, but basically we've got the cash rate, so the RBA statement. Now, keep in mind, as usual, the RBA will be more than happy to try and talk Aussie down. So that's clearly something to keep in mind. Then we got the construction PMI out of the UK. We got Yellen speaking, and we've got that dairy auction out of New Zealand. So again, keep in mind, both New Zealand Central Bank, Australian Central Bank, more than happy to talk the currencies down. And we've got a lot of event risk, not only with them on the wires, but also with stuff coming out in terms of data. These dairy auctions. Then on Wednesday, we've got Australian GDP, as if that weren't enough. We've got the services PMIs out of Europe, out of the UK. We've got ADP non-farm. We've got a Bank of Canada on the wires. So that's going to be very interesting to see, because pretty much Canada's been getting, Canadian dollars being getting killed because of crude, wheeling and dealing on oil. But, all the data coming out of Canada has been pretty good. So that's going to be something interesting to keep an eye out for. We got Beige Book, and, we've got that BOC on the wire. So that, and that only takes us to Wednesday, right? Then we go into Thursday. We've got retail sales trade balance out of Australia. We've got the MPC statement. So we got the BOE on the wires. We've got Super Mario in the house. So we've got that ECB press conference. Everybody wondering, are they going to do more? Are they not going to do more? So that's going to be clearly a very interesting play. And then on Friday, as usual, apart from more Canadian data with the unemployment rate, we've got that little cherry on top of the cake, which is the non-farm payrolls. So clearly, this is an interesting week. Market's going to be coming back after holiday, and we've got pretty steady data flow, right? So if you got used to a bit of chop last week, and you were looking for more volatility, more movement to come into the market, well, be careful what you wish for, because you might get it this week, okay? So as usual, we're going to try and go through as many pairs as we can. I like to keep these meetings fairly informal. So whatever you want to review, if we've got a chart, I'll look at it. I don't care. Just tell me whatever pair you want to go. We'll try and do a first come, first serve. So just pop it into the Q&A box. Whatever you want to look at, we'll review. If you have anything we want to discuss, pretty much nothing's off the record. The only thing is, I think it's better to try and focus on the more interesting pairs, right? So again, if I've got the first one asking for, somebody asking for a really exotic pair, and then we got a gazillion people asking for euro, I'll probably prefer looking at euro. Now, again, we can officially start the charts now because Mario Draghi's in the house, so always good. I didn't see you, Mario, at the beginning. Welcome back. So let's get cracking, right? Okay, let's start with euro. Yeah, okay. Looks like so far we're gonna do euro, and then we'll go through the commodity currencies, right? We'll do euro, then we'll do Aussie, Kiwi, and CAD. Okay, that sounds like a plan to start off, and then we'll see where that takes us. Alex, are you going to talk about Darwinix? I mean, we can. I think it was, I don't know if everybody's had a chance to really go through all the material because there's a lot of material. I wanted to do a specific webinar on that. But, if you've got some quick questions, I'm more than happy to try and answer those. Again, I would prefer any questions to be interesting questions in the sense that not something that you could easily just read on the website. So I would appreciate it because if you just do the homework first and then ask, I'm more than happy to tackle any question. So let's look at, since Mario's here, let's look at euro. So what's going on in euro? First of all, euro's trading now about 124.71, right? So euro, we've talked about this chopping effect, right, around this 125, right? Toronto trader in the house, hello. And we said that clearly this is very, very aggressive, right? We've got a lot of weight on the pair. It's come back around these 125s, and we're looking for direction around the 125s. And sustained closes below the 25s, we would expect this to try and ultimately accelerate back down towards the 120.40 level, okay? And on closes back above the 125, we'd expect to see a bit of a relief rally, a bit of a healthy move and a move back into the 27.80s. Okay? I think that should be clear to everybody who's following the blog. And now, sorry, I was about to choke. And now we're just hovering there. Now, keep in mind that to the downside, what everybody, we've been talking about, everybody, their hamster and their grandmother and God knows what, everybody's looking and obsessed about Euro USD on the monthly, if I remember correctly. Let's see if I'm losing it or not. Everybody's looking at this 200 DMA saying, so the monthly moving average saying it has to touch, it has to break. Again, nothing has to happen. The only thing I would say here, if you're looking in terms of the bigger picture, is that we like to focus on healthy market moves. We like to focus on what happens 80% of the time, not what happens 20% of the time. We're in the boring camp. So again, if you look at even every time we've moved back down towards this area, on the first test, this line, this moving average or this whole zone keeps on holding. So if anything, coming into here, even though we're holding heavy, okay, we could see some downside, but you see this is not exactly what you would call a healthy move. Now again, before we get people saying, oh, euro isn't healthy, it's going to die, euro wasn't healthy a gazillion times. Of course, moves can be extended, but keep in mind, don't forget that moves can be extended to the upside too. So the only thing here, if you're looking for percentage play, if you're looking for pot odds, things like that, it makes a lot more sense to look for some kind of bounce here than to start, hey Tim, how's it going, and get aggressively short into this brick wall, right? Now also the other thing to keep in mind, which is interesting, is that again, always the market is giving us context, the market's always feeding us information. So the fact that we're holding below this 25 into Super Mario into next week means that the market is still positioned very aggressively to the short side and is still trying to press for more pain to the downside. But when this happens, most likely the risk, in terms of surprise risk, the surprise risk is for us to see some shorts covering ahead of the release. Or you could get a situation where the ECB either doesn't announce anything or doesn't say anything that's convinced the market everything's already priced in, and that even though the news or whatever comes out is bearish euro, we'll still get a little pop because it's just the market readjusting, profit taking, etc., right? So that's what the way I would look at it in terms of the bigger picture, right? Does that make sense to everybody? Any comments, any questions before we look at a tighter trading range for this week or a 4-hour chart? Okay, yeah. So again, if we're looking into on a tighter chart, what's happening is, well, we put in this initial low. And then for me, what was very telling was we had, if I remember correct, this was the gap down where we tried to take out lows, right? So we had this gap down, tried to take out lows. We closed at the lows, very classical actions. You have the usual, what we call the fortune seekers, trying to get long with a tight stop below the close on Friday night. Market opens, takes them out, breaks their dreams, and then gives more percentage play players a chance to get long and try to ride that whole move back into the 125s as we were discussing on Twitter, right? Now, I think a lot of people were looking for this to break and see at least a move back into 126, which we didn't get. But right here, what that means is that going into Draghi, going into next week, what I would look at, you clearly have one very strong support, which is that base at those 5350s, and anything that happens inside this range is what we say, don't get confused about velocity of move inside range. It just means it doesn't mean a lot until we break out. And there are two strong selling points, right? Well, not selling points, let's call it resistance zones, which is the 125. We've been keep on going on. I've been tweeting only about that on Twitter, saying, Momo line bullish for action above or below, because, you can see that basically, this is being the Momo line intraday, right? You can go, we tried to press it, bam, smackdown. We get back into it, smackdown. We got some aggressive move, smackdown. So this is clearly being the pivotal level for Momo and Flows intraday, and it will likely continue to be that way. Now, what I would say is that, going into these ECB meetings, the market tends to like to cause a lot of pain, right? So what we'd expect to see is the market to take out stops both sides. So we would assume that through Thursday, we would get some kind of action to try and take out both the 126 and those lows. Now, it doesn't mean it actually has to get there, but we would expect to see some kind of starts of moves to try and force those extremes. And only outside those extremes would we expect the market to get some follow through, right? So we'll have to see how it, but that's what I'm looking at. Looking for a lot of chop inside this range. We really need to get outside that, and then we'll see what happens, right? And going back into the weekly chart, right? Where's our weekly chart? If we do break out, if we break out of those lows, then if we hold below those lows, then 120.40s will come into play. If we break above those 126s, then we look for 127.80s to come in play. Both sides possibly very quickly, right? So that's the way we're marrying that weekly chart in terms of giving us an idea for the general context with this, what we would call more of a trading chart or more of a levels here, right? Yeah, any kind of when you're pressing new lows for the year, new highs for the year, the market will try and take out those aggressive levels. It's just normal. But what you want to look at is, the only thing I would say is that, if price comes back down into 2350s, and then that's the lows is 2356, that's probably just 2350 protection, right? So don't be the guy that we see price printing or the gal 2354 or 49 and you start shorting like a crazy man. Or you see that on a news on the spike through the wheeling and dealing, we print 2601 and you start getting long like a crazy man or a crazy woman, right? There's very little edge, especially on these news releases, unless you really know what you're doing, to try and trade the breakouts like that. Let it settle. Let price confirm outside of levels. Don't try and jump the gun. Don't be too aggressive. Keep in mind that there will likely be a lot of interesting trading opportunities this week, right? Don't be in a hurry to trade. Let price come to you. Does that make sense? Yeah, I mean, I don't like breakouts in general, but you know, you can trade them. It's not my style, but I think it's a way for junior traders to get into a lot of trouble. Because especially, you know, if you look at them on a book or on a blog post or with somebody posts them with hindsight, they look like the God's gift to traders. They look so easy, but the reality is they're really not. Do I think the markets will be dead after ECB non-farm payrolls? Again, it's very difficult to say because it depends what comes out, right? They could set a trend, right, for the rest of the year, but it's very difficult to say unless we see what comes out. Yeah, but there should be more trading at least for another week or so. But again, very difficult to say unless we. And again, market depends. You know, there'll probably be some kind of market moving, right? Okay, so how's Debbie doing, by the way? Yeah, so what's going on Aussie and Kiwi now? Aussie, it's really all about these lows, right? So Aussie, we're currently trading 180, 184.68, right? So we're actually trading right below those lows, right? And what it's just been here is just the market trying to take out more lows, trying to cause more and more downside, right? So again, looking at it on a weekly, what's tricky here is that actually let's look at it on. You see that the RBA is going to continue to try and talk it down. It looks weak, yada bada bing, bada bang, yada bing, whatever you want to say, right? But to a certain extent, it's still a fairly interesting long in terms of carry trade kind of discussion. And here, you know, trying to get aggressive, it's a tricky one, right? Because if you look in the past here, there's a lot of support here, right? All the way back down, there being a lot of support, very interesting buying. So I think it's going to be the market will likely try and cause as much pain as it can into the RBA, and everybody's going to be expecting this to tank more on the RBA. So I would expect that that's probably the widest held view out there, that it will continue to stay heavy. It will continue to stay heavy into the RBA. People will try to sell it below the RBA, and they just want it weaker and weaker and weaker, right? I'm not really sure what number they've been talking about. They throw out all kinds of silly numbers. And so the problem is, unless you're trying to scalp it, you know, if you're looking for a bigger play, I'm definitely not looking to try and sell it into the hole here, right? So what I would be saying here is, if you look to the downside, I'd be focused around, you know, first of all, what happens here around the open. So meaning that if as we start to open and we go into London, you know, into Asia rather, sorry, and we hold back above these 84.79s, then it might be an interesting overnight play just to try to scalp some pips to the upside, right? Maybe you get even lucky, you get a bit more attraction, right? So that could be an interesting level to play if it fails to hold below, to play some upside. And further down, then I'll be interested in looking at how we behave in that whole 84.50, 84.00. But gun to my head, I'd be more interesting to look for some kind of opportunity to get long, even though I'm not eager to get into a trade, than rather to short it into the hole. But you know, it'll be interesting to see. Again, on the upside, you've got a bunch of resistances all over the place, and really, unless we start to get back about 88, 80s, 89s, this will likely continue to trade heavy. But you know, it's interesting. It's interesting. I think there's probably, in terms of the short-term Momo plays, there's chance to scalp it to the downside and to the upside. But if I'm looking to position myself longer term, you know, it's either buy aggressive moves down or sell some rallies, depending on how we behave early in the week. It's really not a preferred trade of mine. It's not. It's been holding weak and it's been tricky. I've been a lot more active on Kiwi, and I like the chart a lot more. I've been trading this more to the long side, and you see here on a weekly, it's trying to hold here. Kiwi's actually trading now 78 tenths, right? So it's interesting, and you see that, you know, globally speaking, with the action across the board on Aussie has been holding weak, but it's trying to hold. All shampoo lovers are going to be talking about inverse head and shoulder patterns forming here on the daily. Also, shampoo galore, inverse head and shoulder here on the 4-hour, whatever. There's been a bunch of them. I mean, it's interesting to see, but I think here it's going to be, we'll have to wait and see, and we'll likely see some wheeling and dealing on the RBNZ. And the biggest event risk really here is the dairy auction, right? So we'll have to see how that behaves. But clearly with this kind of action, even though we continue to see some pressure on, I think the interesting sells here were on those presses back into 79.30s, not when we're holding here. This is more of a play to look tactically to trade maybe some longs. So we'll have to wait and see how this trades. But again, neither of them are in particularly interesting AAA setups, right? And there's a lot of a risk going into this week. So we'll have to see what happens. But broadly speaking, those are the levels I'm focusing on those two pairs, right? Okay, no problem. Okay, Debbie, all good. Rocking and rolling. So so let's see what happens here. Now, CAD is the other interesting chart, right? And it's all about, we talk about this on the on Twitter too. It's all about these 114s, what's happening around this 114 level. Again, a lot of very interesting short opportunities here on those first tests of failures at those highs all the way down, right? And if you remember, when we moved down here, we talked about the fact that we were at very interesting, I think there's also talked about it on the weekly outlook on the YouTube one. We're a very interesting level because this was really the key point in how we were going to continue in this whole phase. Now, we said that whether you're short or long, that the healthy move would be to be a bounce up, right? It's the bottom of this channel, of the short channel. It's the bottom of the long channel. So the healthy thing would have been, whether you're long or short, is to play this. Either cut your shorts to re-add higher or get long for the move back into the upside. And then it was going to be really interesting because that upside was either going to be the sell point for the continued move all the way back down to these new lows, or it was going to hold this channel, break above, and then rush back and test those highs. So this actually ended up confirming the long view. And we're back at those highs, but really technical, very, very nice action on CAD. Again, it's been suffering a lot of wheeling and dealing simply because of what's going on in crude. But here it's going to be interesting to see how we behave with, with the central bank on the wires, how crude's going to settle. But again, it's a really interesting resistance here, and I think it's an interesting resistance that needs to be respected. It's currently trading 14.28. So it's trading a bit higher here. So we'll have to see how it behaves. I really expect that upside to be defended. So let's see what happens. If we break that upside, so by upside we mean those strong highs that were defended, which were pretty much at the 114.65s, and we get daily closes above there, I would expect us to try and very, very aggressively try and make a move towards 115, 116s in an aggressive fashion. As long as we don't get any continuation here and any kind of follow through to the upside, I still think the healthy move is to see some kind of move all the way back down inside this range. And keep in mind that also because of the shenanigans on crude, on oil, I consider this really as a very choppy area, right? So again, we would say don't get confused about velocity of move inside range. So I think here now, the edge is at engaging at the extremes of these ranges, and unless we get daily closes outside those highs or daily closes back below the 112.20s, we'll probably see some very whippy and chopping inside this this range, right? Yeah, see, well, it's just a lot of wheeling and dealing. We'll have to see how this settles here with the data, with the rate decision, the central bank on the wires. We'll have to see how they say how the market reacts. But right now, it is what it is, right? It is what it is. Okay, so we've gone through the first set of questions. Everybody, charts people were looking for. What next? First come, first serve. Jukebox style. Just drop the pair and we'll look at it. Yeah, where's that weekly we've got on cable? So cable, what we said is, again, don't get confused about velocity of move inside those 5720s and 5580s. Very, very choppy action inside these ranges, right? Very, very choppy. So it's just stuck there, right? And again, this week we kept on saying on Twitter, eyes on those 5720s, eyes on those 5720s, and we kept on getting smacked down there. So we'll have to see what happens out of the BOE. I don't think there's anything particularly interesting that's going to come out of the BOE. No, I mean, to answer your question directly, we'll have to see what happens across the board with everything else. But unless we get a weekly close above 5720s or a weekly close below the 5580s, this will likely continue to be very, very choppy. Now, with this kind of action, if we start to get a weekly close below the 5580s, then I would expect it to try and really hold heavy and make that final move back into the 152.30s. If we get a close back above the 57.20s, I would expect to see a move back into 159.50s, 156s, right? It's a tricky one here. It's just been very, very choppy, right? You can see by the wicks on the charts, it's just been very, very choppy. If you look at it on a 4-hour chart, it's again the same thing we discussed. You see those lows that kept on holding. It's been trading in an extremely, extremely tight range, right? A beautiful little chance to get long here on this fake out when we also had that attempt to gap down on euro. And then it just got no traction, right? It was just the range, 57.20s. So kept on popping back. Sellers, bam, scalping off this level. Again, I wasn't trading this to the short side. It's still trading this to the long side. And, in a very sloppy manner, trying to break outside of this range. So it finally did, and then it didn't hold, right back down into those lows. So again, it's very choppy trading. It is what it is. So right now, where are we? We're hovering right inside this range here, this whole area when the market got supported. And we'll have to see how this trades. Keep in mind, it's similar like euro. We're stuck in some very, very choppy action, right? Chances are the market will try and take out those lows. It's tricky, right? We've been doing this for over 5 years now. There's times when the markets are a lot easier to read. There's times where the markets seem, like cash machines, ATMs, because everything's working out really nicely. And there's times when the markets are not going anywhere. And there are times when the markets are tricky to read, or sometimes they're just very choppy, right? And again, it doesn't mean there aren't opportunities, but what it means is that you have to try and realize the different contexts and the different kind of market scenarios, and that will help you understand where you should be positioned more to try to look for intraday moves, when you can look for intra-week moves, when you can look for swings. There's certain markets that are just not ideal. You're much better off just trying to be scalping tighter. That's just the way it is. But at the end of the day, there are always cycles, right? It's nothing new. This has happened before. This will happen again, right? It's just cycles repeating themselves, okay? I don't know if you just got in. We just did Aussie, so you're going to have to look at the recording. We just talked through Kiwi, Aussie, and CAD. So just look back on the recording as soon as it'll be posted. It'll just have to load on YouTube, but I'll post it after the session, okay? So, gold. What's going on gold, Don? Gold's hovering here and it's very, very choppy, right? We're talking about this pretty pure bottom it held here for the move all the way back into the 1200s. And we kept on saying, 1200 pivotal for action, right? Um, Not something I would have been too interested in engaging at the 1200s. I know a lot of people are going to say, oh, this is the short, super easy short because it was right back into the 50 back of the move from highs to lows. It was just a pure short, easy money, right? I don't really think so, right? Because the point is we came back into here. If this was an aggressive move short, it should have got sold here. We came back into this 1200, and then we got a lot of wheeling and dealing around the referendum, right? The Swiss referendum. So in that kind of scenario, I really don't like to participate. I don't want to be involved. So after the fact, it may have looked like a good trade, but there's just so much risk. Also with the open tonight, you have no idea how this could have opened. This could have opened down a gazillion pips or up a gazillion pips. There's really not a lot of edge, right? So that's my take on gold. And right here, what's happening? We're pretty much stuck, right? We're stuck inside a very big, broader chop range, and that broader chop range is defined by those lows, the 1200s, and that 1250, and most likely will continue to chop around that range. Did I by any chance have any Euro CHF? No, I've not. Don't. I've not been not into lottery tickets on this Euro CHF. So, and again, Don, I think it'll be more interesting to look to engage at the extremes of this range, not necessarily in the middle, right? Tom wants to look at Euro GBP. Yeah, sure. I mean, Euro GBP is, I think, probably, I would say, I think the darling of all the banks and all the big players. Everybody's looking for this to be the easiest, in brackets, structural short. Um, we've been pretty much short this for a gazillion years. These are all measured moves shorts, very pure, all highlighted with these, up here. So, this is nothing new for us. We've been looking for these 7260s for ages. And again, we'll have to see, it's pretty much all a rate story, right? But if you're still in the camp where you're saying, BOE is going to hike rates before ECB, et cetera, this is still an interesting short. The question is how to play it. As long as we're inside this choppy range here, I don't think there's particularly an awful lot of edge unless you're looking more towards the upside of the range. Right here, we're not extended enough. I don't know if you have a specific question on it, Tom, but right here, it's just chopping it. And to me, it feels like, it's just waiting for the next news in terms of rates, of policy or something to decide what to do. But most likely, even if it pops, it's probably going to be sell zone into these highs, but it might just tank from here, okay? We traded this a couple of weeks back. This is a pretty pure short. Was it on this Euro GBP? Where is it? And again, basically looking, as we said, we like the extremes. We don't like to engage in mid-range, right? And what happened here, we had this beautiful move all the way back into these, above these 80-20s that kept on getting sold. Like you can see, this level just keeps on getting sold. Price really unable to get traction back above these 80-20s, and we really like to engage at extremes, right? Not in the mid-range. And you see here, once again, we press back above that 80-20. Beautiful little close on the daily, right? You even had a beautiful close on the 4-hour. That's what we were focusing on, right? Chance to get short and do what? And play this for the move back into, for a bigger scalp, towards the 50 back of the range, right? And what we said also is, once this is the quick pips all the way back into mid-range, 50 back, Percentage play here is to flatten out your short or get long, not to add short to be selling into the hole, right? Choppy action. So again, that played out very nicely. And right here, I'm really not involved, particularly not interesting in here. In this, it's just, again, it's chopping around this range. Not a fan of getting long this. And again, I'll be focused at extremes. So bit longer term, still structurally looking at this as bearish and just being patient and looking for opportunities at extremes and not necessarily in the middle of the range. I don't know. Does that answer your question, Tom? Okay. Any comments? Any questions? Um, Anything anybody wants to look at? Any chart anybody's focused on? Yeah, I think those are the most interesting questions, right? Those are the most interesting charts, really. Euro CHF, I really think there's nothing interesting in Euro CHF. So, not to be a jerk, but I, I just think that would be, it's just silly. For me, nobody really serious is going to be looking at Euro CHF for a gazillion reasons, right? For me, it's okay. I watch the haters come out, but for me, it's the classical thing where it's very easy if you're writing some kind of a newsletter or something, it's very easy to just say long Euro CHF, stop below 120 and take profit at 125, 130, whatever, right? Then if it works, you look like a genius. If it doesn't work, it's no big deal. The problem is you take those trades and you get a gap down at the open and a 200, 300 pip gap down at the open, you're not sitting pretty, right? And the problem is all the newer traders have no ideas that can happen, and nobody's going to tell them that can happen because half of the other guys calling trades on it have never traded through enough cycles to understand the real risk involved there, right? So personally, I think especially to junior retail traders, there's just so much risk trading that. For having to watch that paint dry, you're much better off trying to buy a lottery ticket, I think, right? So I'm not trying to be a jerk. I just don't want to bother with it because I think it's very misleading. So not interested in Euro CHF. And again, all the CHF pairs, there's no, it's a tricky one because, you're looking at, CHF against JPY, it's dog against dog, right? Because, Swiss don't want a strong Swiss franc. Yen's, BOJ doesn't want a strong yen, etc. It's just there's a lot of other interesting opportunities out there, right? There's a lot of Tim, good to see you. Hope your cat's doing okay and hope you're still cycling, and the garden's good. So again, there's not a really there's not a lot of interesting things. If anything on yen. A lot of people are going to be short here, Euro JPY, simply because of that negative close on the daily or whatever. I think there's not an awful lot of edge there. You can make money, right? But all things being equal, there's not an awful lot of edge. Also because of all the rebalancing our portfolios, all the flows that have to go through on European ETFs, etc., etc. And there were interesting opportunities on JPY. There was this beautiful little base here. Those were the opportunities. Trying to get long here around 120s, right? Or trying to milk the last pips, or trying to get short. I just don't think I don't think there's a lot of edge around that. USD CHF, it's a fairly interesting chart for me, in the sense that it looks like it's still holding a bid, but I think it's interesting to try and play failures here, especially if Euro spikes on profit taking on into the ECB. This could be an interesting one. We've got a tight little range, and you see that it has been, this whole 96.90s into this 97. This has been an interesting line. So still, this is something I'd have my eyes on. You have a lot more structure here. But that's pretty much the only chart in terms of JPY or CHF I would be looking at. Maybe scalping USD JPY for some tight longs, but not an awful lot of interest there, right? Again, I'm not a huge fan of all the silly pairs, what we call this AUDs, the NZD. Well, do you have that chart up? I think we've been looking at that. Where is it? Let me see if I have that chart up, or we'll do it. AUD NZD. I'm pretty sure we had that off. Does anybody from the weeklies remember? We've been looking at that, haven't we? Or I think I trashed it the other day because I was just sick of all the funny pairs. Let's look at it new. Let's do it blank. AUD NZD. So do you have a specific question on AUD NZD? I mean, right here, it's the fight, the dog fight, right? If you look at it on the monthly, you clearly have very, very aggressive support coming here, right? And you can see it with all the way back in 1995, when you have this base here on the monthly. Every time we popped back into this level, we kept on getting buyer support, right? So also when we had this year, everybody was getting excited that this was finally going to break. But this is clearly the kind of level that's so important. It's very difficult to trade, right? Because you see even here, when you did get a monthly close below, it ran back above. So it's a very tricky area to trade, right, in terms of the monthly. And if you're looking at on the weekly, again, I think everybody and their grandmother and their hamster and everybody's looking for a long. And, gun to my head, if I had to trade this, I suspect I'd also be looking for a long. But the point is, is it really interesting technically? No, right? It's not really interesting. It's all about those lows, right? It's all about those lows. So clearly, the question is, what you have to understand is no matter what kind of reversal candles you can get inside this range, Tom, it's tricky because your real risk is going to be the market gunning for much bigger stops further down, right? So it also depends on what kind of time frame you're looking at. But yeah, there could be some wheeling and dealing, something to do this week. I don't think there's particularly a lot of edge. Here we've had this breakdown, so I'd look at as being the pivotal level here. Going in all that data, all the rate decisions, right? Back above, bullish, below, bearish, but I don't think there's an awful lot of edge or an awful lot you can look at in terms of technically trying to trade this, right? Okay. And Euro AUD, I know a lot of people are looking at also talking about Euro AUD. There's the Euro AUD. Do you have a specific question on Euro AUD that you want me to answer, or are you just looking for a general review? Here you're getting a lot of, clearly there's a lot of wheeling and dealing, and with the weak Aussie, it's getting traction back to the upside, and a lot of people are focusing and looking here, if we break up, are we going to start to get a lot of traction to the upside, right? But the question is that it's still pretty choppy, right? It's still pretty choppy. So I know a lot of people are looking at this trying to get long. Just keep in mind that if you're trying to get this long, if you're trying to get long here for a swing, you're paying negative carry, right? So that's something to keep in mind also. And if anything here, it's pressing against a brick wall. So I'm not a, you know, I'm not a huge fan of this pair in general, and here it just looks very, very choppy inside this range, right? I just think there's so many more liquid pairs, so many more interesting pairs than trying to focus here. See, there's a bit of a choppy range. You've got a bunch of, I just think the same thing here. If we break up, yeah, we could get a bit of traction to the upside if we hold heavy, but again, I don't think it's a particularly interesting chart. Okay. Good stuff. So, any comments, any questions, anything anybody wants to look at? We've done through about 45 minutes, so I think we've tackled most of the interesting charts. So unless anybody has anything very specific they want to look at, I'd be looking to call it a night, but more than happy to stay on for another 10 minutes or so if anybody has questions. Signing off. Okay, have an awesome one, man. Take care. My pleasure. Yeah, so let's see what's happening, right? Let's see what's happening. Should be a very interesting week. And yeah, sure, we'll do a webinar. The best thing is also if you've got questions on the whole DarwinX stuff, you can just use the comment section in the blog, because what I prefer to do is just try to get a good log of all the questions and then do a webinar when I've got like 10 or 15 questions I can tackle. So then it's also recorded and they're all in one place. It'll probably make a lot more sense, okay? Good stuff, guys. I'll get this on the recorded. Have an awesome one. Have a great weekend. Thanks for stopping by. Thanks for flying with 50. And I'll have it up on YouTube as soon as possible. Thanks again, guys. Have an awesome one. Take care. Bye-bye, guys.